Hi, my name's Duncan McDonald, and I'm an analyst with the Parliamentary Budget Office.
And I'm Director Jason Jakes. You may know me from such PBO reports as Supplementary Estimates B and Where Does My Tax Money Go? I work with Duncan. We're here today to show you two interactive online tools that we have developed to help you to conceptualize your taxes. One of these has been up on the website for a while now, and the other one was just put up recently.
That's right. First off, let's start with a tool that's been up on the PBO website since the summer. We call this particular tool the tax tool on the website. I know it's a bit of a bland name, but I don't think that anyone can say that it's not descriptive. Jason, why don't you set the scene?
Okay, thanks, Duncan. Okay, everyone, close your eyes and imagine. Every year, about 26 million of us file federal tax returns with the Canada Revenue Agency. About 17 million of us actually have to remit income taxes. These 17 million people pay roughly $120 billion a year to the federal government. On average, that's about $8,000 for each taxpayer. But everyone knows that virtually nobody actually pays the average. The federal government has a progressive income tax system, where the more you make, the greater share of your income you will actually pay. Folks earning less than $44,000 per year will pay a marginal rate of 15%. While plutocrats earning more than $1 million per year will pay a marginal rate of almost double that, 29%.
That's right, Jason. There are actually 4 income tax brackets, ranging from 15% to 29%. In 2014, the government says that we will pay 15% on the first $43,953 of taxable income, 22% on the next $43,954 of taxable income, 26% on the next $48,363 of taxable income, and 29% on taxable income over $136,270. Now those numbers are pretty exact, but that's because tax people are pretty exact people. They don't mess around.
Thanks, Duncan. At the PBO, we receive a lot of questions about the federal tax system. Parliamentarians want to know who pays what, and what would happen if you increased or lowered tax rates or the tax brackets.
You mean who wins and who loses when the government plays around with personal income tax systems?
That's right. To help folks figure out who are the winners and losers of any such change, Duncan and his colleague Trevor Shaw designed an online tax tool. The PBO tax tool estimates the increase or decrease in personal income tax revenue associated with a PIT rate or threshold change, and as well the consequential effect of how people react to the tax change. For instance, lowering personal income tax rates will put more money into people's pockets, which in turn will be spent on clothes, meals, and other goods. This in turn generates additional GST revenues. Most importantly, changes in tax rates will also affect people's decisions to work.
You mean you increase my personal income taxes and I want to work less?
That's exactly it. Research tells us that the more of our paychecks we need to hand over to the government, the less work we actually want to do, and vice versa. The effect is very small, but still very real. Duncan, why don't you walk us through a couple of examples?
Sure thing. Up to now, we've been looking at the splash page for the PBO website, which around 30,000 people visit each year, from Tuktoyaktuk to Tracadie Harbor. From here, I'll show you how to navigate to the tax tool. We start by choosing the official language of your choice, in this case, English. We then hover over the Research Resources tab in the menu, and then Infographics. You can see that we have 3 choices under this tab. The second and the third relate to the tax tool. The aggregate choice will present the overall revenue impact for each group. The per person choice will present the revenue impact for each individual. That is, what would the impact actually be on your pocketbook each year?
Let's start with that one.
Okay. You can see that the presentation table has a list of income brackets on the side and age brackets on the top. Right now, the table is white, indicating no changes in taxes payable. But that'll change. As you can see from the bar at the bottom, net tax increases will correspond to orange and red colors, while net tax decreases will correspond to blue. In our first example, let's try reducing the lowest income bracket to 14% from the current 15% rate. As you can see from the heat map, the tax rate goes down for almost everyone, except for those earning less than $10,000 per year, because they currently pay no federal tax due to the basic personal allowance.
Whoa, just a second, Duncan. I know what the BPA is, but for those listening, can you explain what exactly is the basic personal allowance?
The Basic Personal Allowance, or BPA, is a tax credit provided to all individuals that, in effect, ensures you pay no federal tax on the first $12,000 of employment income. Getting back to our 1% tax cut in the lowest bracket, if you look at the heat map, in the lower right-hand corner, you see a total box. Hovering over this box, you see that the average value of this tax cut for all age groups and income levels is about $174.30. But not everyone benefits equally. For instance, you can see the darkest box is for individuals between 61 and 65 years of age, earning between $90,000 and $100,000 per year. Hovering over the box with your cursor, you can see that the box pops up telling you that the tax change per person in this group is about $395.
How would age affect the value of the tax cut for individuals? I mean, isn't it worth the same amount for everyone?
That's a great question. It won't be worth the same to everyone because of the unique choices made by each family and the corresponding set of tax credits and deductions that each are eligible to receive. For instance, I am still paying off my student loans and you are paying for a daycare for your daughter. Each of these has distinct tax benefits which would affect our respective returns. As well, many of the tax credits are set at the lowest tax rate, currently 15%. Hence, if you reduce the lowest tax rate, it lowers the personal income tax payable as well as the credits that folks have to offset their payable tax. In this specific example, it is likely that folks between 61 and 65 have fewer tax credits than other age groups. Therefore, when you reduce the lowest rate from 15% down to 14%, it reduces the net benefit of their credits by less.
That was cool. Can we see what happens if we increase the tax rate for high income earners?
Sure. To do that, you can click the refresh button at the bottom of the screen and the tool will defer to the default settings. But let's switch over to the other version of the tax tool that lets us look at the net financial impact to the federal government. This view shows the same data, but with a different perspective. It essentially tells us how much additional revenue the government will collect or lose by increasing or decreasing tax rates. You can see the heat map looks exactly the same as the previous version. To make the change of the highest income rate of 29%, you click here. How much do you want to raise it?
Let's say 10% to a 39% marginal rate. I'm feeling extremely progressive today.
Sorry, I can only raise taxes on the rich by up to 1.9 percentage points.
Why is that?
That's another great question. The impacts of the tax changes are estimated within a particular range, around which we can reasonably assess how folks will react. Moving beyond that range, our estimation model is less robust.
What do you mean robust?
I mean that it's less likely to be accurate. That's why the tax tool only gives you information within a specific range. Going back to our example, if we raise the highest rate by the maximum amount to 30.9%, you see that it will generate additional revenues of about $1.8 billion each year for the federal government.
And can we use that additional revenue to provide hard-working middle-class Canadians with a tax cut?
What did you have in mind?
Why don't we expand the 15% bracket up to $50,000?
Sure. Let me just click on this slider and voila, targeted middle class tax cut. You can see from the total box that it isn't exactly revenue neutral. The two changes in unison cost the government a little under $1.4 billion per year.
What happens if we change the elasticity assumption?
A good question. Well, elasticity reflects the impact that tax cuts or increases have on people's willingness to work in the labor force. Elasticity goes up, they are more sensitive. Elasticity goes down, they are less responsive to tax system changes. As you can see, if we increase the elasticity to 0.05, in effect assuming some effect of tax changes on behavior, you can see that the total cost of these tax system changes lowers to $1.1 billion each year.
That is really interesting. So, in effect, the more indifferent folks are to their pocketbooks, the greater the fiscal impact of any given tax change.
That's right.
That's pretty cool. I'd like to keep some of this information for myself.
No problem. At the bottom of the screen, there is a button shaped like an arrow pointing to the right. It's next to the refresh button. If you hover over it, you can use the data and crosstab functions to export the data from the heat map as you like.
Well, Duncan, thanks a lot for taking the time to walk us through using the tax tool. But we need to save some time to discuss the other online tool, the new one that we just recently launched.
Right. So we will put the distributional analysis to the side for now and head over to the other tool. It's located at www.readyreckoner.ca. This tool is similar to the tool we just discussed in that it can provide a broad idea of the impact of various tax changes, but differs in that the age and income groups are not specifically examined. Also, the Ready Reckoner tool can show the impact of changing taxes other than income tax rates and thresholds. In this tool, we can change, for instance, the capital gains inclusion rate or even aspects of the Canadian child tax benefit.
Now, if you are one of our legions of Twitter followers, you would obviously know all about the annual Ready Reckoner report that we produce in the fall of each year. I believe that the official name is the revenue impacts arising from tax adjustments, but make no mistake, that is our annual Ready Reckoner report. If you look at that report, you will be able to immediately spot a lot of similarities with this online tool. And that's because the tool is based entirely on the report. We found good take-up with the report and decided to make the upgrade to an interactive tool.
Yeah, if you were a previous report user and are thinking of making the jump to the interactive tool, we can highlight the benefits for you. First of all, you can make incremental changes to any of the indicators listed by simply dragging the blue indicator bars in the direction that you want. Whereas the report would give you an indication of the impact of a prescribed change, the interactive tool lets you choose the size of the changes yourself. And secondly, as you make more and more changes, the tool performs all of the heavy lifting and keeps a running total of the impact of each change. Now you don't have to do any adding or multiplying yourself. It's like getting grade 5 for free.
Duncan, can you take the people through an example?
Sure thing. Let's start off with a big one. If we scroll to the bottom of the page, we can see the heading Goods and Services Tax. Below that is an indicator of the scale of the changes. You can see that the tool shows that a 0.25% change in GST will result in approximately 1.6 billion change in federal revenues. So let's change that by a little bit. There's a little blue bar to the right that shows where GST is currently residing at 5%, and we're going to move that bar to the right, increasing GST by 0.5%. And presto, we've made a hypothetical change to the tax system. You can see on the far right that there's a blue box displaying the effects of that change. Now, we may want to offset the GST increase by a bit, so let's go up to the top and change one of the tax rates. Let's change the second rate. This is the tax rate on taxable income from approximately $44,000 up to about $88,000 that we discussed in the previous tool. Let's give people a break there and lower the tax rate from 22% to 21%. We simply move the blue bar on the right to the left, and presto. See that the blue box on the far right has updated the cumulative change? That's pretty much the tool. Note that the tool doesn't tell you who these tax changes affect. The GST change will affect some consumers differently than others, while the second tax rate change affects some other subset of taxpayers. The tool only shows you the changes to the federal coffers.
Also, if you don't see in the tool the tax indicator that you want to change, just let us know. If there's enough interest, we can simply add it to the tool, and you won't need to wait an entire year for the next Ready Reckoner report to be released. This tool is interactive in more ways than one. It is online interactive between you and the tool, and is real-time interactive between you and us at the PBO. We are eager to provide products that provide value, and your feedback is essential to achieve that.
Jason's right. Your feedback is essential. Oh, and there's one more cool aspect of the tool. Say you're having a heated debate about tax rates, whether it's in the House of Commons or 4 a.m. at your Tau Alpha Chi frat party. You want to have something to show other people.
So with that in mind, we included the ability to print a spiffy PDF report of your chosen tax changes so that you can have a hard copy reference of the changes that you implemented in the tool. This way, you can use the PDF printout to back you up. And the only thing that beats paper is scissors.
The button to create the PDF version of the changes is located at the very bottom of the web page.
Well, that's it. Here are 2 new interactive tax tools for you to use when attempting to understand changes to the federal tax system. Thanks, Duncan. I found it really interesting. Hopefully everyone else did as well. I want to thank everyone for tuning into our podcast and let you know that we are always keen to receive questions or other feedback. And there you have it. Have a great day and enjoy manipulating the federal personal income tax system.